We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Friends and family will prosper. Let's pick up for business. Okay, guys, we're going to head over to where price started at. Today we are going to mark up Ford Motors. So Ford Motors started off in January of 1968. Basically, the market ran into a double top. So it started off as a single top, created up momentum, went to new areas of highs at the time. For a double top, first leg, second leg, third leg, fourth leg. After the fourth leg, we'll get a retest and a push down about 2 to 3 times. Then go to the retest and the market push down. 1, 2, about 2 or 3 times. 2 or 3 times the market push down. Went to a major area of support. Had to go another formation. First leg, second leg, third leg, fourth leg. That creates a double bottom. After the double bottom, we find a retest, which happens here. And from there, we're looking for that 2 to 3 pushes to the top. 1, 2, 3. Market went up to new areas of higher highs. We have a pattern right here again. So once the market wasn't able to break this resistance, it dropped down. So here we go. First leg, second leg, third leg, fourth leg, double bottom, push up. Market back into previous areas of resistance. With this major pattern, 2 patterns as well. The first pattern I see is right here. This long wick shows that the market has pushed up, lost momentum, closed out here. So that shows that the market may be reversing. Also, we see the railroad track side by side. We have the red bearish candle that's engulfing the green bullish candle, showing that the market can drop, exactly what it did. So this area pattern is which pushed the market down for 1, 2, about 3 pushes down to the bottom. Major area of support. So we got the single bottom into a retest. So if we go down the time frame, it could be a single bottom or a double bottom. But we do see a single bottom here. And going to retest once, retest again twice, and then the market pushed up. Almost look like a sideways double bottom or a double top or a triple bottom. But if you go down the time frame, it definitely identifies itself. From there, the market pushed up into previous areas of resistance. So once the market got here, just consolidated back and forth, buy and sell, buy and sell, buy and sell. From there, the market wasn't able to break up to new levels. It actually touched this level about 2 major times, 2 major attempts of breakouts, 1 and 2. Wasn't able to break, so the market came back down, retested. So I guess it's a single bottom, a double bottom in here. So market retested here, the market went right back to previous low areas, lower lows. And then from there, the market retested itself, created some momentum. Also see a pattern. First leg, second leg, third leg, fourth leg, double bottom. Retest happened here, pushed up. 1 level, 2 levels, about 3 levels. Came back to retest previous areas of support. Full push up again. This is the market trying to attempt to break out this area. Once, twice. It rolled the top a few times. Third 3 times. And then you got the double top. First leg, second leg, third leg, fourth leg. I'll retest. The market pushed right back down to a midpoint, almost like a range pattern. First leg, second leg, third leg, fourth leg, double bottom. After the double bottom, what happens? The retest. Then comes a retest. Not once, but twice, 3 times, about 2, 3 pushes to the top. Gotta go back, gotta go back. Also in this area here, got another double bottom. First leg, second leg, third leg, fourth leg. Retest happened, side by side, consolidated sideways for that push up once, twice. Went to new areas of higher highs when it wasn't able to break that first time. When it broke it the second time with this resistance, third time, rode the top, came back down into it, fourth attempt, fifth attempt, sixth attempt, seventh attempt. And while doing that, we did find a double bottom. There we go. First leg, second leg, third leg, fourth leg. The retest happened here. And when we find a double top retest, double bottom retest, we look for the market to push up. But it didn't do that. The market ended up turning around after the retest and it dropped it about 2 to 3 levels down. Market returned back to previous areas of support. Got another formation double bottom, first leg, second leg, third leg, fourth leg. After the retest, we look for the market to push up. That's exactly what the market did. And then from there, we have a double top. So we got to clear some off a little bit. So right after we got that double bottom, first leg, second leg, third leg, fourth leg retest, that push up happened. Right after that push up, the double bottom came right behind that. So double top came right behind that first leg, second leg, third leg, fourth leg. So we have the double top and the double bottom back to back. Okay. We see the double bottom with the retest that pushed the market up. Now we see the double top with the retest that pushed the market down. 1, 2, about 3 levels. Consolidated sideways. Another drop down to the bottom for maybe to about another 4th level. There, the market did double bottom again. Also, major areas that the market's going to turn around when you see these long wicks at the bottom showing the market may turn around. And we got the engulfing pattern not once but twice. The engulfing pattern created that retest area for the double bottom, first leg, second leg, third leg, fourth leg right here. Retest happened, market pushed up once, pushed up twice, pushed up 3 times. And then we have a long wick here showing that the market may lose momentum, exactly what it did. The market did lose momentum. We have a engulfing pattern. That's the bears engulf the green, which is the bulls. So the market that was able to push the market down in a Hegel pattern. First leg, second leg, third leg, fourth leg, double bottom, and go to retest. After the retest, what that market does, push up. Exactly what it did, push right back up to previous areas of higher highs. Once the market got here, the market wasn't able to break this resistance as in previous areas of the single bottom with the long wick. So it did a formation of a double top. First leg, second leg, third leg, fourth leg. That's a formation of double top, which is an M pattern. So once we see the double top M pattern, we'll see the retest. Had got a retest, came back to retest previous areas of resistance, and then the market dropped. Dropped a few levels, about 3 to 4 levels down to the bottom. And then we had an area of support. This is where market price is. Market price is right here, higher highs, market price, lower low range. So we got to figure out what's going on. So what we're going to do is clear our screen. There's a lot of market up today on Ford Motors. Went all the way back to 1968. What we're going to do is head over to price action. So we did see that for market structure, we was in the area lower lows, and we headed up to previous areas high highs. So we're in that uptrend. If we had to choose areas to create our SR lines, where price is at currently right now, there's a peak here. There's a peak here. There's a peak here. Peak here. There's an inverted peak here. There's another peak here. We're going to do next, we're going to head down a time frame. We're going to add SR line between, we're going to add SR lines between our SR lines, doing a top-down analysis. So we're looking for peaks and inverted peaks. We have a peak right here. We have a tight peak right here. We have inverted peaks here. Clean touch on the opposite side. We have more inverted peaks here. We also have some here. Also some inverted peaks here. About two more here. One more here. Here's a peak. Now let's head over to price action. Let's see if we can identify what's going on in the market. Okay, so what I see is that the market, we have an area of higher highs, we have a second level here, and we have a third level here, where price is trying to break or not break. We have a fourth level here. What price did, broke into that resistance, came back to retest the support, broke up into that resistance, came to retest that support, broke up to that resistance, came to retest that support. Wasn't able to hold. Railroad tracks did not happen. The second candle engulfed over the previous two candles, showing that the market can drop, and we got that confirmation. So it's basically a single top with a retest that pushed the market back down. So basically what we have to do is wait for the market to turn back around and respect our trend line. So we're looking for the market to lose momentum. Let's go to the daily time frame, see if we can identify what's going on in the market. Okay, so in the market, we do see levels of higher highs, second levels here. Let me change the color on it. We have this level here. So what market did was market came up. So what market did was it came up, it broke through, came back to retest, our line again, wasn't able to break. So we got the double top that pushed that down. Okay, now the retest is happening, but the retest turned into a double bottom. First leg, second leg, third leg, fourth leg, maybe a fifth leg in there. So about triple bottom was pushed up back into that area of that peak. So we got one touch, two touches, three touches to the top, and now the market is not breaking. So three touches to the resistance area, and now the market's falling. So for us to take entry, so if the market breaks this level here, then it'll drop down further. If it breaks this level here, it'll drop down further. So for right now, what we can do is wait for this market to lose momentum, and we'll look for that turnaround. So we can see this long active candle is extremely bullish. So if it's extremely bullish, showing that the next one could be a strong bullish one. But let's look down the time frame. We can see anything else differently. Okay, so what we do see is the second and last candle is extremely bullish. Excuse me, the second last candle extremely bearish, And the last candle is a small bearish candle, at least quarter of that size of the previous one. So it's showing that the market can be losing momentum. So all we're looking for is the market to show some type of pattern. So it can draw out another pattern. It can do a double bottom. It can do a double top. It can push down further to a trend line and come back up. But the area that we're going to be paying attention to is right here. Grab this high area to this low area right here. And whatever the market is going to do is going to identify itself right here. So as long as we wait in this time frame, the market is going to identify itself for us to take it to the next level. So let's say if we do identify, the market does identify itself in this area, how far we would take it up. If this was a trade, let's say we caught it here, and let's say we take it back up to previous areas of higher highs. Let's say we take it up to our yellow line, which would give us a total of 132 pips on the way up and about 45 pips on the way down, and that can be tightened up a lot more as well. So let's say 132 pips on the way up and 37 on the way down for the stop loss. This is an amazing trade, everyone. If we do find that reversal, if we do wait in this area here and figure out the pattern, the market's going to identify itself with a trade, which would be an amazing one. So also, guys, what we identify, just to let you guys know what we do is for the trades, if we are following the trend of price, for us to take entry, we do not take entry at the SR line. We wait for the market price to break the SR line, to come back to retest our SR line. Once we get here, then we take the trade to the next level. Okay, so once again, we wait for the market to break our SR line, to come back to return our SR line. Once the market returns to our SR line, we look for entry and take it to our next level, and that'll be our TP. Okay. Also, guys, for you to understand what's the pattern that's going to identify itself here so we can take it up to the buy position, to the next level for that amazing 132 pips, what we're going to do is go to Forex Pattern Cheat Sheet, and that's Forex Pattern Cheat Sheets, and on Google. And what you do is go to images and just review the images of what the pattern is. For example, this right here is a triple top, 1, 2, 3. Market it wasn't able to break, and that's kind of similar to what we just ran into with the pair that we just did. It was a triple top. Market's not able to break, so the market dropped back down. So we just have to wait for the area for market price to do what it do in this area down here. It could do a double bottom and then reverse back up to try again to break up to that resistance on the previous pair of Ford Motors. At the end of the day, once we wait for the market to do what it do, we can take trade, which would be amazing, for 132. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.